Welcome back, ladies and gentlemen. It's Benedict here again from Jagging and Company Associates, and I want us to continue with the ledger. And now we are in chapter 2.5.4, the general ledger. So what do we mean by general ledger? So here we are saying that general ledger is a record of all past transactions of a company organized by accounts. So all the past transactions we are getting from the source documents that we record in journals. We record them in we record them in accounts, and these accounts are what form part of the general ledger. So these accounts, when you talk about accounts, we are talking about the asset account, we are talking about liabilities account, we are talking about capital, expenses account, revenue account, and all that. So all the transactions that we'll record in all these accounts will form the general ledger. So we are saying that the general ledger is a record of all past transactions of a company organized by accounts. Then again, we are saying that general ledger accounts contain all debit and credit transactions affecting them. So remember the double entry concept that we debit rather all for every debit there must be a credit entry, and then we also had accounting rules, and that we are saying that we debit the receiver, credit the giver, and we also debit assets and expenses and credit liabilities and capital. So when we do that by these accounts, we mean that all the assets will be debited and all liabilities will be credited, and then all the expenses will be debited and all the capital will be credited, and then all those will be recorded in accounts, and then those accounts will be the primary source document of the general ledger. So again, we are saying that in addition, they include detailed information about each transaction, such as date, description, amount, and may also include some descriptive information of what the transaction was. So the accounts here will also record the details of the transactions. So the details that we are getting from the source documents are the details that we use to make records within these accounts. That's where we're being told that the information about each transaction, such as date, description, amount, and other discrete information on what the transaction was all about will be recorded in these accounts. So the general ledger is a record of all past transactions of a company. So what you need to know here in summary is that general ledger, the general ledger is a record of all past transactions of a company organized into accounts. And the accounts here, we mean assets, we mean liabilities, and we mean capital. Because assets will have various sub-ledger accounts for assets. Liabilities will have sub-ledger accounts for liabilities. And then capital will have sub-ledger account for capital. And then when we come to revenue and expenses, the difference between revenue and expenses will form retained earnings, and then the retained earnings will be added to capital, and then that will form equity. So let's move forward, and rather let's proceed. So down here we have we still have an explanation of what general ledger is all about, and then we are being told that when we are using accounting software, general ledger sorts all transaction information through the accounts. So it's the same explanation that we've given up there. And then it is the primary source of generating company trial balance. So earlier we said that accounting is a process, and it starts from the source document to journals. Then from journal it goes to the ledger, and then from the ledger it goes to trial balance, and then from trial balance now we can generate financial statements. So before we come up with the trial balance, we must have a general ledger, and then the general ledger being made up of general ledger accounts. And these accounts are the assets account, the expenses account, the liabilities account, the revenue account, and the capital account. So after generating such kind of accounts, we'll have a general ledger. And then from the general ledger, we'll have a trial balance. Then we can now make generate financial statements. Then lastly, here we are being told that the general ledger accuracy is validated, it is validated by the trial balance. So the accuracy of the general ledger is validated by a trial balance, which confirms that the sum of all debit accounts equals to the sum of all credit accounts. So this statement is coming from the from the double entry concept, that for every debit entry, there must be a credit entry. That's why we are being told that the sum of all debit accounts must equal to the sum of all credit accounts. So the general ledger accuracy is validated by trial balance. Remember, in a trial balance, we must have debit balance, and you also must have the credit balance. And the debit balances must be equal to the credit balances. So when the debit balances are equal to credit balances, the accuracy of the general ledger will be validated. So we also have, as we proceed, we also have an overview of the general ledger. So this is what the general ledger looks like. Under the general ledger, we have the general ledger accounts. And the general ledger accounts we have here, we have assets, we have liabilities, we have revenue, we have expenses, and then we have equity. And then under general ledger account for assets, we also have sub-ledger accounts. The sub-ledger accounts here will be non-current assets and current assets. And then when we go to liabilities, we'll also have current liabilities and long-term liabilities. And then when we go to revenue, we can have the sale of goods, and we can also have the sale of services. So when you provide a service, you can sell, so we call those services because they are not goods. And then when you go to general expenses account, sorry, we'll have the sub ledger for we'll have various sub ledger for expenses. So here we'll have fixed expenses and variable expenses. And then you can also have operational expenses and non-operational expenses. So those will form part of the sub-ledger account for expenses. And then when we go to equity will have capital, and then we'll also have retained earnings. So under equity we'll have retained earnings, and then we'll also have capital. So when we move to I want to stop at this moment, and then when we come back to the next class, we'll see what the general ledger account is all about, and then we'll go much into details about the general ledger account, and then we'll start with assets account. So thanks a lot for watching, and let's meet on the next class or the next video.